The Business Journal Roundtable series is sponsored by Advanced Technology Partners.
Good morning, and thank all of you for participating in the Business Journal's Housing and Mortgage Roundtable, our third and final roundtable for 2025. Let's get started by going around the table and having you introduce yourselves, starting.
My name's Sue Filipovich, and I'm with Burgan Real Estate.
Trisha Howe, Executive Director of the HBA.
Lewis Voisey with WesBanco Bank.
Johna Scherzer, First Vice President of Retail Lending, 717 Credit Union.
Micco, Keller Williams Real Estate.
Mike Kurish, I'm the CEO and President of the Associated School Employees Credit Union.
Rocky Page, I'm with Consumers National Bank.
Michael Stevens, co-owner of Coldwell Banker Real Estate.
Tony Lucarelli, Farmers National Bank.
I'm Marlin Palich, and I'm General Manager and Principal Broker for Berkshire, Hathaway, Stouffer Realty, and also President of the Ohio Real Estate Commission.
Thank you all, and we will start with directing the first question to Marlin.
Okay, I'm ready.
How would you characterize the housing market in the Mahoning and Shenango Valleys? Is there reason for optimism? Is there ample inventory across different prices and types of homes?
Well, let's start where I do think that we now do have ample inventory. And statistically, even nationally, we do have, the homes are staying on the market longer, which is now increasing inventory. I'd like to see more properties on the market. I think that there is a little bit of a lag, only because of interest rates and pricing right now. But there are certain brackets that I do think we could see more inventory in, and that would be in that first-time home buyer range kind of housing for those that are wanting to buy that American dream. And that's something that I think we need to be looking at is affordable housing. So in that probably starter range, I'd like to see a little bit more of those homes coming on the market or being constructed.
Anthony?
Yeah, I agree with all of those comments. I think inventory levels are improved. I think there's more issue with maybe the quantity, quality of inventory today. That first time home buyer, prices have gone up, and I think that in large part affordability has impacted that first time home buyer market. But rents are going up too, so it's 6 of one, half dozen the other. Optimism, I think if the rates dip below, they've stayed flat, which I think has encouraged buyer activity. There are challenges. We have a lot of people that are pre-qualified to buy a house but haven't been able to find the right house yet. And I think as rates begin to decline, that activity will pick up. So I think a lot of the mortgage professionals out there, the MBA, Fannie Mae, are predicting that mortgage rates could dip below that 6% mark towards the end of next year. And I think that's where my optimism lies. I think if this thing goes below 6%, it really starts to spur activity in the market.
In addition to that, and interest rates lowering, that's obviously going to stimulate things. But optimism. I mean, let's face it. Our local region, we have a lot to be excited about, hopeful about. Local economy, a lot of growth coming, and the buzz on that is huge population growth. And that is going to be the game changer. If that happens, and to the extent of what we're talking, then we are going to be in a housing crisis. We're going to need employees. We're going to be in housing. If we have the potential growth around here that we're talking about, then yes, we may be facing a housing crisis, and a very large, economical growth, which I think, you hear the national stories, what the real estate market does, but I think we're very unique because I don't think, nationally what happens in a real estate market or anything is a reflection of our local economy and our local growth. So that's what I see going forward.
Yeah, I agree. I mean, nationally you hear about, prices dropping. We've not seen that locally at all.
Exactly.
So typically we don't drop. We plateau for a while. and then we go back up again. So I agree with everything they said.
And we've always been, very unaffected. So we
Yeah.
don't have a high, we don't have a low. But maybe the first time we're actually going to see more of a high, and a long-term high. We're talking, maybe decades. What they're talking about doesn't happen overnight. So maybe we're talking decades of growth.
I think you got to look at some of the data below the second tier level. If you look at a lot of the homes in the Mahoning Valley, many of the homes in this area were built in the 60s or earlier. And a lot of these homes just simply do not satisfy the needs of current buyers. They need to be upgraded to current standards. So if you take a look at the inventory, yeah, there may be enough homes to satisfy the number of buyers, but if you get down to the particular type of home, you have some additional challenges. I think you also have to look at the average income level of the individuals who live in the valley. You have new homes that come in at roughly $400,000. Only about 30% of the people that live in this valley can afford a home of that magnitude. The home prices that buyers in this community can actually afford are more in the $150,000 to $200,000 level. So that's the inventory that I think we need to address. I think that you also need to look at the fact that homes are smaller in size than what they've traditionally been. Many of the homes are larger than what many buyers need. A lot of the home buyers today are in the 2 to 3 individuals within a family unit, and they don't need the homes that were built for 5 and 6 or more people that live in the home. So I think we need to look at some of those statistics that are just underneath the level of how many housing units are available to the number of buyers that we have.
I absolutely agree with a lot of the statements that have already been said. I believe there's a lot of optimism for our area, mostly because it's becoming a more balanced market from what I'm seeing. There's a lot more inventory on the market, not as much as I would like to see, especially in that first-time home buyer range. But with rates coming down, I think it's going to transition into buyers being more favored, but also with lower interest rates, more buyers means more competition as well, especially in that first-time home buyer range. But our location, it's one of the most affordable markets in the whole entire U.S., so I think there's a lot of optimism just based on that alone.
Affordability is key. And as we've heard many times, first-time buyers, we have so many people that are coming into the housing market that we do need housing stock that fits their needs. They're not looking for a huge house. They're not looking for a $400,000 house. We have to focus on affordability and getting them into homes between homeowners insurance, taxes, their principal and interest. They're looking for something that they can afford, and then if it's not the home they want, they need budget to be able to make the improvements that they want to make to it. So I think consumers are thinking it through, and that's where we're seeing more homes on the market. But we're also seeing the ones that fit this bill that we're looking at for these first-time home buyers, they're the ones that are selling quickly. Our pre-approvals are still staying out there because when that house hits, they're acting. So there is a lot of optimism to come with it and a lot of focus that's needed to build the housing stack that our consumer wants.
And I think that optimism is the key. That's what impacts the housing industry more than anything initially. And that first-time home buyer, everyone has hit on it, is the largest block of buyers that we've seen throughout the history of home buying that is pent-up need. And in addition to the affordability and the type of home that they want, the other aspect that as lenders, as communities, that we've got to focus on too is how do we address the ability for them to afford the payment but not have the down payment, not have the funds to get into a home, and how do we create programs and opportunities to be able to fill that gap of lack of down payment and closing costs, I think are critical for us as an industry to close that gap.
I agree, just coming down the pipe of everybody that is saying, but I will definitely agree with Michael. The average home that is in our area right now is not one that a first-time home buyer is looking to purchase because you're having to remodel or you're having to take a lot of money out of a situation that you don't already have because of the amount of down payments that you have to have, regardless of the interest rates. It's important to look at our inventory, and our inventory is a lot on the market, but it's not one that is going to be something that a first-time home buyer wants to look at and get into. They want to look at a new constructed home They want to look at something that is around 1,500 square feet, and they really don't want to go over $150 per square foot to build. So working with builders and developers and contractors in our community throughout Trumbull, Mahoning, and Columbiana counties, that is something that our developers and builders are up against. So we want to provide for the first-time home buyer the new construction, but you have to be somewhere where the infrastructure is already there. And if that's not happening, you can't afford to have these first-time home buyers buy a lot for $80,000 to build a home on it that's only 1,500 square foot. So we have a lot of optimism because we have a lot of things going on where Delphi things are moving into our area, especially the Trumbull County area, and sitting on the Youngstown Warren Regional Chamber Housing Council. We have people coming out from internationally here. They're not looking for the big home. They're looking for just something small. But one of the biggest things that came to their attention, to our attention, was there's no type of cultural-based community as far as grocery stores, as far as living conditions and how they live across seas. So they're not looking for the big house. They could live in a 2 or 3 bedroom home. But then we also have to make sure that we're also providing food banks for areas where they are not deserts for them. And so there's a lot of different things that go into our inventory, and one of the things that we should look at is the people that are moving into our area from out of our country, and it's going to be a huge influx here in this area that we really need to start to address.
Now, Trisha, just to follow up on that real briefly, in fact, a lot of these people aren't even looking at houses. They want to move into multifamily units.
This is correct, because they want to bring they want to bring their families over. And we are very lacking in multifamily. And try to get a developer or builder to build a duplex nowadays, it's not happening. And it's just a lot of it because of the cost and the code restrictions too. There's a lot of things that have come down with the regulations. I'm proud to sit on the Ohio Homebuilders Association exec committee where we fight every day, to get regulations for our builders to go away. There's just some things that are coming up on the codes and building that are absolutely ridiculous and not needed. It's just a way for our companies, electric companies, water companies, and those type of things to, just handle our developers. So there's a lot that goes into it that I see on a daily basis and work with on a daily basis that I think a lot of people are blind to in our area.
Yeah, and kind of to reiterate what everyone has been saying, but it's interesting, those entry-level homes that are under $200,000 in our market, that's the majority of homes that are on the market right now, but the issue with them is that they are built in the 60s, so they need all those major things done. They need the furnace, the roof, the condition that they're in. So these first-time home buyers might not have the funds to be able to do that. Yes, the price point might be affordable, but the improvements might not be. So that's where the challenge is there. That's where, people who are flipping homes and rehabbing them still need to get them at a reasonable price so that they can present a good quality home. It's still an affordable price for the entry-level buyers. One of the things too that I study is, as far as stats go in our area, and this is all tri-county area, is what's called absorption rate, and that is the months of inventory that we have on hand. So in a balanced market, we want 6 months of inventory. We haven't had that in years. Right now, we're right around 3.6 months of inventory in the Tri-County area. So, so it's a healthy market. It's still more of a seller's market, depending which pockets you go in. And, so until we move into that 6 months of inventory is when we might start seeing some more, incremental changes with it. But before, back 2 years ago, I would say we were at 3 to 4 weeks inventory max. That was it. I mean, homes were just turning so fast. So it has balanced that way, but we need to work on the affordability and, like you're saying, the new construction end of it with construction costs.
What changes have you seen in the way people are searching for and finding a home in 2025?
Zillow, homes.com, realtor.com.
But
I don't know, I
AI.
don't work in the real estate industry anymore, but it used to be people would call and
Well,
want
obviously
to know
with
more
the-
information about it.
With the new laws, and Marlin could speak on, that's really the biggest effect over the last, 6 to 12 months.
Yeah, I think, there's been that change. But also we're talking about searches. We're now talking about using AI. whether it's ChatGPT or we're using any of that. If you see some of the websites that are out there now, they're incorporating that. So you're going to see that's the new flavor to use that for a purchaser to look for a home. And so it's already made a difference. It's going to make a larger difference in how people look at it. And real quick too, we talked about one thing too, is we talk about our baby boomers. If we look at our market, there's a lot of baby boomers and they want to do things. But let's say they want a condominium, they want a villa, we don't have them. And again, that they would be giving up their houses, and a lot of them are in good shape. They've kept them up, but they have nowhere to go. And if they decide that they do want to finance the rates, they're giving up maybe a low interest rate going to a higher. So I just wanted to throw that out to look at maybe that market would open up if there was some place for them to go. Yeah.
And with searches too, I think, the public, we're transitioning. They're going to be relying on real estate professionals more than ever before, especially with the new agency laws. You can't go look at a house right now without entering into an agency agreement, whether it's permanent agreement or exclusive agreement. So people in the public are going to find out real quick that they, once they're entering into a buyer's agreement with an agent, they're going to rely on them and they're going to have to offer more services than ever before. So we're just, those laws were just implemented last year. So we're seeing that transition now, and I think that's going to only go in that direction, requiring the real estate agent more than ever before.
I don't think it accounts for a large part of the consumer base, but I think the digital access does allow individuals who live in other communities to compare the Youngstown, Mahoning Valley market to markets that might be in the Pittsburgh or Cleveland area, maybe even the Franklin County area, or even further away. We find that there's a lot of individuals who have jobs that allow them to work mobilely or work remotely, and they can exchange a home in a higher priced community for a home in the Mahoning Valley for much less than what they would pay there, and I have a change of standard of living. And so we've seen a few buyers that actually fit that type of qualification, that they've actually moved in from the outside of the community specifically to own a home, but yet work in another community.
It's a very good point.
I actually think open houses had starting to become a lot more popular because these buyers who know that they need to sign a buyer's agency and don't want to commit to one certain agent, they're allowed to come into any open house they want without signing any documentation. So that's, I think, something that's starting to become more popular among these more savvy buyers who don't want to commit to just one agent or one person.
How are rising property values and property taxes affecting purchasing in the Mahoning Valley? What about rising homeowners insurance rates?
All those are components of the cost of ownership of a home. So much attention is always drawn to the interest rate and how that's going to affect buyers, but rising costs of insurances are rising at a very rapid pace compared to what they have done historically. We see concern with property taxes. In fact, we have certain legislative issues that are taking place right now to deal with that. All of these are cost of ownership. Individuals who do not have enough for a down payment, sometimes they have to buy PMI insurance. That's another cost that is added to the cost of ownership. If you buy a lower or older home, a lot of times that has to be updated. Those are additional costs. There's a lot of costs that are associated other than just the interest rate that a consumer needs to consider, including the tax and the insurance.
From 23 to present, we've seen over a $50 spike in their monthly payment. That's taking away from what they can afford to spend on their home. That's taking away from the budget they have for these repairs that we're all talking about and these enhancements they need to the home. We've seen, first it was taxes that we've seen catch up and make that spike. Now you're seeing it in insurance, not to mention homes that are already on. I'm sure some of the people in finance here, you've seen where your buyer's coming to you, I can't get my insurance renewed. I'm hearing that more and more out of our existing membership.
Especially condo associations.
Yes, those have been.
That is
that's a
probably
great
the biggest
point.
one I've seen. And their HOAs are doubling.
Yes. So their additional costs are going up.
That's exactly, you're right, Michael. We manage condo associations as well, and it's becoming more and more difficult for them to get insurance. They're now talking about, and I think this is overall residential and condos, but separating, having an insurance policy and then a separate policy for roofs, because the roofs has been a major expense for insurance companies. So I don't know, if that is happening anywhere, but that has been a definitely detriment to the cost of entry level, getting, entry cost into a home.
We have an insurance company too, and we have different lines, but normally a house that's got a roof, even though we put roofs on there, are supposed to last 25 or 30 years. A lot of the insurance carriers won't carry, if they're 15 or older, they don't want to touch them. So that becomes an issue too. So then how are they going to get insurance? And whether it's condominiums or villas or just single family homes. So that's put another wrinkle in the equation, that money, what do we do? How do we find that? So where do we get insurance so they can have coverage and suit the lender and themselves in case it's needed? So.
And I think that whole issue kind of ties to what's important for all of us in our industry. I think, especially now and going forward, is the educational aspect of home ownership. Because we have caused them to focus on interest rates and prices, but not realizing the overall cost of housing. And for all of us, and I think all of us do, is really focus on that education piece so that those who are coming into the market truly understand what they're getting involved with, what the cost will be, and their overall, financial legacy and strategy is critical.
We do pre-approvals, and people want to know how much they could afford. And in a lot of cases, before they make an offer, they're calling us with the address to make sure, because of the property taxes, they can still afford that house. So sometimes it actually can affect whether they make an offer or don't make an offer on a house. So that's a yeah.
Especially your first time buyers. It's so critical that we're having that conversation with them about how an escrow works, because they haven't had that before. And talking to them to be prepared for that first year, your payment may change, and just educating them on that front. It's so critical.
We're going to dive back into an area we touched on a little bit earlier, new inventory production. We've heard for the last several years there's not enough residential construction. Why is that, and is it changing? And is it changing to the extent that it needs to? If we can start with Trisha.
Okay, I was going to say, boy, you got me fired up.
Oh, here.
Well, there's a lot, like I said, that goes into it. We have builders and developers that want to be able to provide new housing. We see it in mostly Canfield area, some in Boardman that is taking place as well. But in the Mahoning County, there are a lot of things that go into a developer and builder's cost. One of them being the infrastructure. As I said, if it's not there, it's very hard for that developer to go up against the EPA, the wetlands. There are just so many regulations that we work on a regular basis down in Columbus to try to get deregulated for these developers and builders, so that they can go on moving forward to build affordable housing. And to them, affordable housing is anywhere $350,000 and up in their minds for new construction, because just despite the lumber cost, the material cost, the labor and finding labor is also a huge problem. So we are up against, our builders and developers are up against a lot of challenges each day. You could have somebody that is working for you one day and then taken by another company to provide for them. So when you have a cookie cutter type of home, those things are going up quickly into developments. And we're talking over in Worcester. I work with Weaver Homes on a regular basis. He's our president of the Ohio Homebuilders Association, and he's just booming. But up in Mahoning County, Trumbull, and Columbiana County would probably even be more so relevant to that. You just don't have those infrastructure costs that are able for our builders here to move forward without having to purchase a lot for anywhere, like I said, $100,000. That's ridiculous. And that includes if infrastructure is there. If it's not there, to put in a road, we're talking millions of dollars, and it's just not feasible in our area because that cost then falls onto our buyer, whether they're the first time home buyer or the person who has a beautiful home that wants to downsize and now into a villa or a condo, which we lack. Just take, for example, what DeLucia's building over on Route 46. Beautiful, beautiful villas are being built there. Well, you're not going to get in those villas under $450,000. And so you have to be prepared, especially a first-time home buyer, as you said, you have to be prepared to have that conversation with them because they are not knowing and don't have the knowledge or haven't been taught. And I think a lot of it comes back to educating them and sitting down with the lenders and sitting down with real estate agents and people that can help them navigate through the waters of first-time home purchasing as well as new construction. But there's a lot of hardship for our land development and our type of infrastructure that doesn't have any that the infrastructure that is not already done. If it's not already presenting itself, then it's just not going to be feasible for a builder or developer to go into that area. And that's what we need to develop.
Those are conversations I've been having with some builders. The infrastructure cost is killing them. They're making zero money. So then what I see as a conversation is, and back to your land, the land from '08 and the housing crisis that we had, what remaining developments that was left have already been gobbled up. That was the first thing to go. And now it's almost like a builder developer has to be all in one because they're the only ones who can go in, afford to make zero money on the lot, but make money on the construction. And no developer is going to go in and just do infrastructure and make money on the development side of things.
I mean, take, for example, Pine Lake. It's beautiful out there, and how they're developing off of Sherritt Road and all of that. I mean, it is beautiful. But now we need builders to go in there, and you need to open up. And that's the other thing that I try to work with a lot of my members that are obviously builders and developers is to come together, to work together. Don't be so gobbled up with this is my property. Share the love and spread it out because we need that housing, especially with Foxconn people coming in again from across seas, all over the United States. We need to have that. So to come together and to work together and say, hey, you know what? I'll go ahead and sell you this lot for a discounted price just so we can get some housing on it. I think that that's just another entity that I work with.
I've had more conversations about JED too.
Right. Mm-hmm.
We really need to do some more, joint economical developments with the local communities. Mm-hmm. I mean, that's going to be the game changer where they get the tax, benefits, waived for.
Correct.
Like the CRA in Columbiana as well.
Mm-hmm.
Yeah, an abatement, which is not unusual.
Right.
I mean, if you look in the Cleveland market, for example, to revitalize, let's say, Tremont or Ohio City and all those areas, they gave tax abatement. So those people haven't paid. And you're absolutely correct, George. In Columbiana proper, there's an abatement. So you have maybe a 10, 15 year, however that abatement is, that gives you a breathing room, on it too. And let's say this too, in that market in 2008, like Michael said and stuff, when that crashed, and trust me, I worked for a company that did do developing and building. Developing is expensive and it doesn't get cheaper. And again, we need to have the communities, if they want the tax dollars, they're going to have to work with the builder to get them in because at the end of the day, it only helps that community. The other thing is, it's the same with lenders. We used to have spec homes. We used to have that. There's nobody hardly that builds a spec home anymore because the lenders don't want to take the risk. They got crucially burnt in the 2008. Let's look at some of the lenders that, so, I get that they're cautious, but maybe it's time to be not so cautious and work with some of these builders and developers and things like that. And I think you're correct too. We're talking about, let's say, Foxconn or whatever. If people are coming over from overseas, they're looking for community. They may be looking for a certain type of go to the grocery store. That's why we have in like Columbus or Cleveland, they have Asian markets, they have whatever. They want that kind of thing too. I don't know that they want to buy as much, but they certainly want a nice place to live, which gives the opportunity for a builder to build multifamily where the communities can be together and things like that. But, I think the lenders too have to, and I get it, they have to loan money and they have to answer, but on the same token, maybe loosen up some of those restrictions. And politically, the communities need to work with the builder and developer, because at the end of the day, it's only going to help them, stores, everything else. So,
Because a lot that we go up against, is zoning and zoning permits. I'm working right now with Dylan's house, and we're building homes for autistic adults. And the zoning process, to go through, and I work well with Boardman Township, it's just not that. It's the crossing of the Ts, the dotting of the Is, and the permits and the zoning restrictions fall back. And when you have that, that's the first thing you need is your zoning permit. And if you can't get that, then you're not going to be able to get, the sanitary and all the other permits that fall in line. Not to say that, the cost of that the permit is the permit. It's $900, whatever that is in zoning. But the thing about it is that if you have a builder that builds in Mahoning County, now that builder wants to go over to Trumbull County, those zoning laws are different. And so I think that we work a lot also to try to get an equal amount so that everybody is on the same page. So I can go build in Columbiana, I can build in Mahoning, I can build in Ashtabula, I can build in Trumbull, so that they're very similar zoning regulations. And it's not that way at all. And I have several builders that go up against that. And some of them are say, well, I'm just going to build in Trumbull County. I'm not coming. I know you have land for me, Trish. I know that you have a great piece. I don't want to get involved with it because, it's a whole different ball of wax. So, so to speak. So it's just, again, another thing that a land developer and builders are up against. And it's a lot to do with zoning too.
There's one thing I wanted to ask about real quickly. We've talked about the 07-08 crisis. Lost a lot of contractors, new home builders at that point. To what extent has that recovered, would you say?
I feel in our area, it hasn't recovered much. You're going to have your stable builders that have been in
I agree.
long term. And
Lot were
you
not
don't have new
replaced.
ones coming in.
To talk about spec loans, I'm not seeing builders that even want to build spec loans.
No. And I have builders that would love to be able to get them.
We lost a ton of builders, a ton of subs, which
Right.
is actually more important.
Subcontractors are very hard.
So right now, I think building is the same as housing, supply and demand. There's a ton of demand, there's not a lot of builders, and the builders that are there are
And they're
busy.
exhausted. They're busy.
And there's no reason to cut, there's no competition. There's no reason to cut price.
To the point you made earlier, not only did we not fill the gap of what was lost at that period of time, but the employees and the trained individuals, that has not been a field that has been gone into by our youth over that 20-year period of time. So those subs and
it goes
all of
back
the
to workforce
employees that are
development.
needed are not present.
To flip a house right now is just, it doesn't make sense. For what you're gonna pay a sub to do the work, it doesn't make sense.
And
Right.
wait. You'll be sitting on it and waiting.
And that's why they don't want to do a lot of spec homes as well. I mean, because I have builders who used to,
Right.
you know,
I've not
Rocky, we
heard-
used to like hand over fist with this. You know, you do an open house, you're selling it that pretty much that day, that weekend. And those were the good old days.
They were.
But it's not that way now. Just, you know, in all reality, it does come back to a lot of that. And a lot of that does come back to the land development and the cost of the infrastructures and the zoning permits and so forth. So I think locally, working with the builders, that would be wonderful to have that connection and, to have that partnership. I think that's important.
How much has the higher interest rate environment affected home sales locally? Do you expect the small cut made recently by the Fed to help with the real estate market, or will it require a more long-term trend of lower rates?
Well, as we said earlier, I think interest rates just represents one component of the whole total price of ownership. We have a lot of individuals in our organization who refinanced mortgages in 2021 and they got 3% interest rates, and they're very prideful of the fact that they got those rates, and they talk like they're not going to surrender those rates, but life-changing events occur. Homes, families grow in size, they need larger homes. we encourage those people that they need to jump at the opportunity if they find a home that's to their suiting, because if they wait, the price of that house is going to increase, and waiting on a lower interest rate is just going to be nullified by not taking advantage of that opportunity. So I do think interest rates will lower a little bit as we go into 2026. I think that the Fed's currently has the expectation that they're going to lower rates a couple more times before the end of the year. But I think that strategy has already been baked into the current interest rate for the most part. And it'll be a matter that if they don't perform that, we may see interest rates go up just a tad. But I think perhaps by the time we get to the end of 2026, we may see interest rates hovering just above or below 6%. But I don't think that's going to be the major driving point as to whether a person can afford a home. It's going to be those other components that we've talked about.
And I think we talk about a high rate of 6%. 6% is not a high interest rate.
We ruined an entire generation thinking money was free.
Remember the late 80s, yeah.
We're a little spoiled.
Yeah.
But it does affect. I just threw some numbers together. For example, a $200,000 mortgage at 3%, which we'll probably never see again. Payment's $841 a month. At 6%, that same payment's almost $1,200 a month. So it does affect affordability, but I think we got to get away from saying that the high rate of 6%. I mean, 6 is still a very good interest rate. It really is.
I think too, that there's a perception when the public hears that, okay, the interest rate has come down or the Fed, cut the rate, which is really more related to the Treasury bonds than the actual rate that the Fed is cutting. So I think there's a misperception, but we do see more inquiries come in when they hear that from the media, like, oh, well, maybe if they're on the fence, okay, the interest rates came down, whatever the amount is, whatever small amount that is, they came down. So it might refresh them to start looking again and really face the reality that, okay, I might not get as much of a home, but now I'm going to start looking again. So I think it's a positive thing for when we do hear that. But so it does help. But yeah, if we could stay in the 6s, that would be great.
I think lower interest rates would help from an inventory standpoint, because I think you have a lot of those people in the 3s or below, that if the rate does dip below 6%, that becomes a little bit more palatable for a change. And I think if inventory opens up, then obviously there's more opportunity for the buyers that we have. I also think there's a little bit of buyer fatigue. I think post-pandemic, you could find 50 houses that you want and never be able to see them because somebody bought them before you could even get an appointment. And I think a lot of buyers were fatigued as a result of that. So I think everybody's kind of pressed pause for a little bit. The fact that mortgage rates have stayed flat is a good thing rather than bouncing around, because I think the longer it stays flat or starts to decline, the more the activity will pick up, the more people will be accustomed to the new normal. And we'll see a little bit more activity.
I was going to say, to me, I agree. 6% is, I sold a house and it was 21% fixed. So 6 to me is a good deal. I think that if it got around, if they heard the magic number, I think it would be 5 something. Yeah. And I think that would get a lot of people moving forward. I think they're looking for something under that. But again, relative, 21% versus or 15%, and we didn't do fixed rates. We did adjustables. That's what we did. And they did work, to be honest with you. But, because getting a fixed rate was just not heard of. But, here's my motto. I think you should marry the house, date the rate, and marry the house. And that's what they should do, because if it goes down, they can always refinance, and I think that's what if they find that house, because the price is not going to go down on the house. It's not. It's going to continue to rise. And so again, date the rate, get the house, and then if you want to refinance, that can happen.
Yeah, and it comes back to there's an increase in use of adjustable rates. That optimism in the market is making consumers say, okay, this isn't my forever rate, and you're seeing more. Well, it's still a scary thing for your first-time home buyer, so it takes it away from them kind of. But some of your more mature ones, they're willing to come off of those low rates and look at that adjustable thinking, this is going down, I can go in now, get the house I want, the price point I want, and then be able to have that rate adjust for me without the refi.
Is anything incentivizing the people who got loans with lower interest rates from a decade ago to move or more to sell their home now, knowing their next interest rate could be double? How does that affect first-time home buyers who want to buy existing homes? We touched on those a little bit before.
I think it's need. I think need is really the only thing that makes you move off of a sub 3% rate, right? You've outgrown the house, or you want to downsize, or you've inherited the property, or it's too much to rehab or improve to what you need it to. So I think need is probably the primary driver to move off of a low interest rate. You're relocating for work, whatever.
Also, if there's such an appreciation on the on the value of their house, if they have that much more to work with, in addition to their need, they still might be able to make the money on that home that they got at a lower price, sell it for quite a bit higher price, and get something that maybe fits more. Maybe they now need an office in their home, or maybe that they need an exterior entertaining area that still fits into their affordability. But knowing that they have that built-in equity now, I think is helpful in addition to those needs.
Yeah, I think something that was mentioned earlier, because I think, Tony, that the life events that happen to us create that. But on the other side of it, and I'll use my wife as an example, is that we would like to be those ones going to a villa or a condo, but there aren't those available. Right. So we have hit a life event, but don't have anywhere to go, so we're going to stay in our home. So back to that idea of construction and the properties that match the needs of people, plays into that as well. Because I have a 2 3/4, and I'm willing to give that up, not to climb steps.
I understand.
Yeah.
We actually made the move, and we basically got half the house for the same amount of money.
Yeah.
But at this point in our life, it was worth it. It was solely need. We just didn't want to deal with the house anymore.
Yeah.
So, yeah, that's what it takes. Mm-hmm.
What down payment assistance programs or other opportunities are available to help first-time home buyers unable or reluctant to get into the market today?
With 717, we have a Your Keys No Fees program that was designed exactly for that. A lot of the first-time home buyers that are coming into the market, it's a shell shock when they get to the fact of, this is what I need to pay. This is my down payment. Oh, and I need to pay these additional fees. So by doing that with our workplace partners, we're able to alleviate some of that burden. And then we've also got, with our first-time buyers, different credits that they can qualify for. Some with the municipalities, they have programs that are sitting out there. Welcome Home, everyone, I know you guys all get excited for it too, the same as we do. Come the spring when those funds open up, we have a built-up thing that our homeowners are there to take care of that so that they can use some of that to help with their down payment as well.
And the Ohio Housing Financing Agency also offers a lot for the first-time home buyers, as well as the Welcome Home Ohio. I know Lauren McNally works very hard on getting that back to us for the spring. So our state reps are really working hard to make sure that money and funding is there, because it was such a wonderful program and has seen such success. But then let's not forget about our veterans either, because there's also the Ohio Heroes programs that are available to them. And from the finance side, they can speak more highly on it. But those are things that we push at the national and state level as far as the Homebuilders go, and working with our local realtor agencies and board of realtors to make sure that these funds are there and that they're accessible to the first-time home buyer, as well as somebody that has already purchased a home and needs to downsize.
The city of Youngstown has a $10,000 grant program, which is amazingly, it's working great. And they also offer I think a $15,000 grant after you purchase the house to fix it up.
Fix it up. Mm-hmm.
Local down payment assistance programs. The state has down payment assistance program. Federal Reserve has down payment assistance programs. A lot of banks offer down payment or closing cost assistance along with their programs. There's also a lot of banks offer no down payment programs, and even the agencies offer minimal down payment, 3%, 3.5% down payment program. So I think a lot of it is education for first-time home buyers, especially understanding what's available to you. I think there's a common misconception out there that you need 20% down. Heck, I sat through a finance class and the instructor said you need 20% down to buy a home. And I'm like, that's not right. So I think there's a lot of gap in education on how much money you need. Our veterans could get in at no money down. USDA has no money down programs.
But I have a question for the lender. So what is the parameters of it? I mean, first of all, two questions. What is the percentage of the loans that you would do yearly? I mean, involve those type of loans. And the second thing would be, what is the parameters? Do they have to live in a certain locale and they'll get more money? So I think those two, so I'd like to hear that.
Yeah, see, the agencies, the FHA, you could buy anywhere 3.5%
Sure.
down. Fannie Mae has a first-time home buyer program at 3% down. The banks programs, the typical bank zero down programs are for VA, or for low to moderate income borrowers or borrowers that are buying in low to moderate income tracts. And we do probably upwards of 20% of our mortgage volume in that space. And I think that's kind of the target for most banks, is to do about 20% in that space.
As a credit union, we're probably slightly higher than that. But I think it's important to note too, like you mentioned Fannie Mae in their first time. Some of these programs do have PMI, and one of the nice things about theirs with Home Ready, they get a reduced PMI rate. So when we start talking about that payment and the things that are going into their escrow, anytime that we can get them into the ones that don't have PMI or have reduced PMI rates, that's great for our first-time home buyers as well, which is why rural works out, Home Ready works out, FHA, VA when they qualify. Those are all ways that we can help to keep that overall payment down.
All of these programs too, the down payment can be gift or grant. So it doesn't even have to be the borrower's own funds.
Yeah, that's where Youngstown and City of Warren's programs come in handy, because a lot of these people, they may not be able to get in. And it also, when we go into those older homes, frees up funds that they can make the improvements that are needed.
I would say 10 years ago, the number one thing stopping first-time home buyers was down payment. I don't think it is anymore. Now I think it's affordability. So I think down payment isn't the factor it used to be.
I think on the down payment front as well, the Ohio Homebuyer Plus program, it came out with such a bang, and now it's simmered away.
Right.
So I think that's a good thing, as much as they've taken away some of the benefits when they restructured it for us as financial institutions, but it's still a great program for our people who would like to become home buyers to start saving a good vestibule for them to, put their savings.
And what's nice about that program too, even though was fired up, is that that's anywhere in the state of Ohio. You don't have to be, in a certain county or area, but you do have to purchase within the state. So I think it's a great thing for younger people, to start investing in that program.
What advice would you give to someone considering becoming a first-time home buyer in the next year or two?
Don't be a slave to your home.
Get pre-qualified
Get pre-qualified.
right away.
As always.
We get
right?
surprises on credit reports. If we know, the sooner we know, the better chance you have of getting into the home you want. We can restructure debt. We can, find errors on credit reports. Get pre-qualified is number one.
Yeah, even if you're not ready for pre-qualification, come in, talk to your financial institution. We want to help people. We want to talk to them about, you're going to buy in 2 years? Great, we can talk about Ohio's Homebuyer Plus. Great, we can take a look at the credit. What do we need to restructure now to get your score exactly where you want it before you need to get pre-qualified? What can we do savings-wise?
I think if you have that much time to look at buying a home, education is key. Know the communities that you're interested in, know what the difference in the tax rates are in those different communities, know what your own credit reports are like. If you can do things to improve your credit score, you're going to reduce your cost of credit. Restructure your debt where you can have a more affordable level. Set aside money for a down payment. But education, I think, is key during that, and make yourself aware of what the market has, and what markets are holding values, what markets are losing values. education, I think it would be key during that 2-year period of time.
And also meeting with a realtor as a buyer consult, even if you're not ready for a year or two, knowing, like you said, what type of home is out there and what price range, and hey, do I want a home that is maybe a little bit of a fixer-upper, and prepare for that, or no, I don't want anything like that at all. So plan for that ahead of time, but just a honest sit down with a realtor that could say, this is what these markets look like, and this is what you can expect going into it. But the financing part is key. That's got to come first.
Yeah, and we've now mentioned sort of the quality of the properties, or that doesn't necessarily fit need. I think a part of that education is understanding what programs are available to buyers, because most banks have a purchase rehab loan program where you can buy and improve. So the house, as long as it's got good bones, and you could fix it to what, the components that need to be fixed. So the education piece, I think, is big. And then what I would say is, if you qualify, to Marlin's point, if you qualify and you find something, the best time to buy is now. Prices are going to continue to go up. There's always the opportunity to refinance. Sitting on this, rents are going up too. So sitting on the sideline isn't necessarily saving you a lot today.
Again, Sue, I agree. I think they should sit down and understand the process. It's not just about getting pre-approved. I like the word pre-approved. I don't like pre-qual, because if I have to go sell a seller on a pre-qual, it's easier to do it on a pre-approval. But they can start that process. The thing that I think they should do, and I think all the real estate agents here would say, they need to come in. This is the biggest investment you're going to make in your life, and it's an equity builder. I mean, you're building wealth. So my point is, understand the process. Home inspections, all of those kind of things. If you're looking for school stats or whatever, it's so easy today. You've got the internet. How hard can it be? And most of the first-time home buyers, they're already on it anyways. But it's understanding the whole process and having somebody kind of handheld them through that, especially on a first-time home buyer. On somebody who's reselling and maybe going down, they need to understand that process, because what it was 20 years ago is way different than what it is today. 5 years ago. Yeah, so, even getting a loan today, it's way different. Years ago, we just went into the bank and they go, oh, I know your parents, and that's fine. We'll make the loan and everything's okay. Well, I've had some where they work at a certain bank and are having a hard time getting it through their own bank that they work for. So there's all of that. I think education on anything we do in life is important, but it needs to start ahead of time, put a plan together, meet with a licensed real estate salesperson, I say a realtor, but and have that person start. The earlier the better. If you're really thinking about it, and do it, and go to that person for your guidance. You need a trusted advisor.
I think buyers also just need to have a little bit more of a long-term perspective on things and more of an open mind. Like, if you could find a home that needs some updating but is clean and has really solid bones, you're probably buying it on the lower end of the price point that you could get it for. So if you live in it over time, update it over time, real estate always naturally appreciates over time, and then all the updates you did to it as well, you're going to probably have a pretty solid home in the long run.
I agree with that. I think expectation for buyers on what they're, especially first-time home buyers, their expectation. I mean, I've seen some of these campuses. I mean, the dorm room that I went to school on was like this big.
Yeah.
Right? Now they've got these big, elaborate, I think the expectation, especially for first-time home buyers, is to get a better property than your first home, than a starter home, a fixer-upper. So changing that expectation from the buyers, I think, critical as well.
What is the regional median home sale price? And are those who paid a lot for homes during the pandemic not able to get the value out of them, or are they finding themselves underwater?
Ohio's, the median home price is $276,900. Nationally, it's $462,200. So the market's still very affordable.
Appreciation has still ticked up every year since then.
I'm probably not the person to talk about value, but I like I said, I've not seen a decline. I've seen a plateau, but I'll leave it up to the agents, realtors to talk about it.
And we've still seen a slight, increase in value, since then. So, I mean, but then, if it's something that was, shortly after and you did pay top dollar or over asking price, and you're still too quick after that, commission cost, expenses like that may have come in a factor, but I haven't seen it be a huge issue where people are underwater. I haven't not experienced that.
What other challenges do you see in the housing market locally? Is it better to be a buyer or a seller going into 2026?
I think that's kind of balancing out. I think there was definitely a time where if you were a seller, you were in the driver's seat in this valley. But I think the inventory has increased to the point where this has turned out to be a balanced equation. I think as we go into 2026, I think inventory is going to increase. And if it moves in any direction, my opinion is that it would move into the buyer's category as opposed to the seller. But I think it's a fairly balanced situation we have today.
Yeah, sometimes I like the reference, it was crazy.
Yes.
Crazy is not good for anybody. Well, it was good for some, but not everybody. I like to say healthy. Yeah. Healthy. I see healthy market, and healthy is more good for everybody.
What local impact, if any, do you foresee from the acquisition of by Compass of the parent company of Century 21 and Coldwell Banker? And Michael, I'll start with you.
No, I mean that has no bearing on local real estate markets, this and that. More of a bearing of the franchise owners. I mean, Compass kind of took on and created one of the largest real estate brokerage footprints globally to affect benefit the franchise ease, but not affecting the markets in any way. No, not at all.
Anyone else want to weigh in here?
Yeah, I think with real estate, it is a relationship business as well. So, it's still important for buyers and sellers to have that relationship with their agent, and the size of the company, varies. There's great, franchise agents, there's great independent local agents, and, that's what's most important is, the professionalism of the agent that you're working with.
Absolutely.
Yeah, I think I have to agree. I think that people do business with people at the end of the day, but I also think it may change. You're going to have a big conglomerate. I think a lot has to do. There's two battling it out, okay, and I think that they're rallying to who is going to be the big player. And so I think that, again, I think real estate is local at the end of the day. What happens here is and I think Michael said it earlier, what happens in the Valley is totally different than what happens in Cleveland. People want to have that trusted advisor, somebody they know, and whatever. The franchises offer opportunities as far as maybe special software, things like that help a company stay ahead technology-wise and things like that. But when it all comes down to it, we do business with people, and it is a people business. And so I think that, it's kind of interesting to watch and read about, but don't know that really is going to affect.
On a large scale, everyone's battling it out with Zillow right now. So maybe.
And I didn't want to say it, but that's what
well,
it
there
is.
you go. I mean, I said it.
Yeah.
So a lot of the large mergers like Compass and this and that has a lot to do with the larger scale. How that affects us, home searches, stuff like that.
And
with Zillow and that's yet to be known. So that would be the only way it would affect.
It's way
buyers.
above my pay grade. That's all I can say. But I think, again, people do things with people. So.
Not being a realtor, but looking from the outside in, I think it's just a trend of another industry. If you look at industries across the board, you can see where this type of activity has occurred. It wasn't many years ago that we had a lot of local hardware stores.
Yeah.
And they were kind of put aside by very large boxes. Small-time restaurants have fallen to large conglomerates. Grocery stores, same thing. It's just another movement of trends. Our banking industry, we've seen consolidations in banking. At the
There's
end
been
of the day,
consolidation in banking, really?
I keep moving down.
I think it's just another growth of a different industry going through growth trends, and they will find their way. And in the end, it's an attempt that the consumer benefits from the activity. And I think our consumers will benefit from technology that will be made available to them as this type of activity occurs, because the economy of scales are going to allow for that to happen.
Beginning with Sue, any final points you'd like to make or any final thoughts you'd like to share?
I'm optimistic about our valley and moving forward into 2026. I think that there is a lot of opportunity. We do need to work on new or improved housing for these businesses that are coming in. We have Kimberly-Clark, Foxconn, Valeric, they're all growing and building. So that is something that is a challenge. Don't have the answers for that until costs come down. But yeah, I'm very hopeful, and I love the Youngstown grit that we have here. So we're hard workers and a great foundation that's been built for us.
Yeah, I would agree with that 100%. I think Mahoning Valley, Mahoning, Trumbull, and Columbiana, great place to live, great place to call home, easy access to get to other places. I think it is crucial that we sit down and look at how we can help improve getting the purchasing of infrastructures down, working with the bigger utility companies and so forth, and wetlands, and the EPA is one of the bigger things. But I thank you for this opportunity. I think it's been a wonderful roundtable. It's great to see people I haven't seen for a minute, but thank you for bringing us together. I think it's important to do.
Two things, just reflecting back on this. I think one is the great push-pull situation we're in with the growing economic aspect and the business coming in, and that always puts a strain on the housing side because they're linked so well together. And although we need a lot more answers in that so that they run and support each other, that's a high-class problem to have. So that provides a lot of optimism from my perspective. The other piece, is cornerstone to me, and Michael, you've mentioned a number of times, is that education when it comes to housing. I think that's the most important thing. I've seen over time a larger segment of the population not even consider housing as a possibility within their lifetime. And we need to do a better job for individuals to realize that is possible. Because there are so many avenues, so many opportunities out there that we have to educate. And it has to start with that ability to say, yes, I can. Because a lot of times it's community, it's familial, it's racial, but there's a lot of aspects that I think has weighed a large part of the population down to say, homeownership isn't even in my vocabulary. And we need to change that through the education and through the promise of what is possible.
I agree. The education's key, the community. We have so much optimism in this community, and it's a resilient community. There's been ups, there's been downs, and the community continues to build. And to be there to educate people. Credit union's thing is people helping people. And at the core of it, it is about the people. It's about all of us doing our part to work together to educate our community. There are so many people in this community that together we can go into these facets that don't dream of home ownership and bring that in. We can identify their barriers and overcome them, bringing solutions into the community to help them overcome fees, overcome stigmas, overcome credit challenges they may have. And that's where the heart of it is. But there's so much optimism going into 2026 and beyond that our community will grow and will thrive.
I think there's a lot of optimism in our community. I mentioned it earlier, but we live in Youngstown, Ohio. It's one of the most affordable markets in the area compared to these big metropolitan cities and other areas. If you go to Chicago and see what you could get for $800,000 compared to what $800,000 gets you here, that's a first-time homebuyer price point over there. So I think just appreciating where we live and understanding that, Youngstown's a fantastic area. The cost of living's cheap. Home ownership is still affordable, and it's just finding the right resources and people to educate you to get you to the finish line.
I think the affordability of housing in our area is key to the growth of our communities. As employers are looking for places to relocate their businesses, it's attractive to them if they have a community that they can come into that their workers can find affordable housing. And that comparison of our housing cost in Mahoning Valley to the housing cost in other areas of the state, other areas of the country, is a key attractive component to an employer looking to relocate. And so I think that we can build on that to help build the community as a whole.
Yeah, I just want to reiterate 6%. It's a lot better than 8% it was a few years ago. We may never see 3% again. Affordable housing, growing economy, it's a great place to be. It really is. We need to keep, one thing politics has taught us is perception is reality. So we need to keep the perception to where it should be. That way it becomes reality. So.
Yeah, I'm excited. I'm excited for the growth. Very optimistic on the opportunity we're going to have in our local economy. With that is coming a lot of questions. We've been talking about infrastructure costs. We've been talking about affordable housing. Well, what is affordable housing? Infrastructure killing, the housing crisis that we need to rebuild. And I think the economy and all these companies coming into our area are really going to be dictating a lot of this. What's going to be the average income? How much, the local economy, the local average income, that's going to be a huge factor in all these things that we're talking about today. So as excited and optimistic as we are, still a lot of questions, and it's going to be fun to be a part of, how this all, plays out.
Yeah, I just want to thank you for having me. It's great to meet all of you and great insight. I too am optimistic. I think we're on the upswing of this thing. It's not a matter of if, it's more of a matter of when. I think we had hoped it would be towards the end of last year and now towards the end of this year and now hopefully towards the end of next year, but it's coming. And when it does, the market will move.
I feel optimistic. And there's times in this valley, after this will be my 47th year, that it wasn't, when the steel mills went and things like that. So now I look at what's happening, and I think the one thing I'd like to see is that everybody needs to work together. Again, I think Michael made a great statement. It's great to have all this business come in, but what's the income going to be? So therefore, I think that our politicians, our communities, everybody has to work together, not at opposite ends, to work together to pull everything together, because we do have, hardworking, resilient people that live in this area, whether it's Trumbull County, Mahoning County, Columbiana County, and they're workers. And so therefore, I just think, again, that this is an education process and everybody is in the same should be working together, whether it's rules and regulations. Let's invite, let's be warm, and let's be open and get people to come in here and want to be part of this valley. And I think that's a good thing. We have to sell this valley. And but I do feel optimistic. And I agree with Rocky. 6% is 6%. That's what it is. So, but I think that I finally, in my career, have seen people working together. And hopefully that will continue to exist and happen. Because if we work together, we can do anything we need to do. So, and thank you again. I've attended these before, and I think it's a great exchange. We have a lot of group people, like-minded people together that want to work together to make our community better, and including you guys too. So kudos to you guys too.
The Business Journal Roundtable series is sponsored by Advanced Technology Partners.